two parts to this discussion. The first part, we're going to talk about this opportunity to invest in pre-IPO stocks of particular interest. Some of you have expressed an interest in SpaceX, and so we'll talk about that. And how do we go about with this? What are the risks involved in this? And how does this all work, essentially? Right. So we'll discuss that part, and then the second part is where we give you a strategy update. So our analysts have given us 3 pointers. One is how is the macro environment doing? So we've collated a set of macroeconomic reports and looking at what we call as a now case. So as of now, how is the macro environment doing? US economy, UK, Europe, and India. There is other economies that we track. And obviously, Indian budgets have come in more recently. So we've just had a analysis set through by our India partner. So we will be talking through what we observe in the market. And then we've also been researching the earnings season, essentially. So the corporate earnings so far, what we've seen, and how things have gone with respect to that. So that is something that we will basically provide you an update on as well. And then we will then talk through some of the changes to our portfolio and what is happening, with respect to our portfolio. So just to give a brief recap, our target is 75% annual returns. So for the financial year 2025, we are at about 70% as of now. And going forward, 2026 financial year, again, our targets are 75% annual returns. And we set a floor of 60%, meaning that is what we call as the minimum returns that we anyway have to deliver. So when the portfolio gets a 60% gross return, that means that you, as a limited partner, will receive about 40% because our profit share is 20% on this. And there's obviously also a 2% management fees, etc. So that's the typical structure in a hedge fund. So this is what we are oriented towards. Now, here is an opportunity for us to consider pre-IPO stocks. What we mean by saying pre-IPO stocks is essentially a private company that is likely to go public within 1 or 2 years. And in most of the cases, some of the employees who own the shares or some of the early investors in that company might want to get some liquidity. So what they typically do is they hold stock which has been fully vested, which means that they can sell it. There's no restrictions on selling the stock. So they contact broker dealers in the US. So typically in the US market, this is how this works. They contact broker dealers, and these broker dealers themselves take down these details, and then they notify professional investors like us. We are hedge funds, so it could be hedge funds, it could be asset management companies, it could be registered investment advisors, etc. They would notify us saying that there are a number of people who are looking to liquidate their stock in this particular company. So as an example, we're going to talk through SpaceX. So I'll probably use that particular example. So when they do that, what we have to do is we will need to submit a bid saying, I'd like to buy, let's say, 1,000 shares of SpaceX for my limited partners. And for that to happen, we will need to have limited partners who are interested in buying the SpaceX stock very specifically, right? Now, how does this work? So, a limited partner is basically an investor in the fund. So, they are investing into the hedge fund and they can commit up to 75%. This is broker's requirement. So, we cannot take 100% of whatever you've invested and put it into SpaceX. Right? We'll have to hold back 25% of your investment, and only then we are allowed to submit a bid. So we've got many investors in the hedge fund, so I can't commit everyone's capital onto this. So it's only a handful of you who are interested in SpaceX. So let's say 10 of you are interested in SpaceX. Let's say another 5 of you are interested in Stripe. Let's say another few of you are interested in Databricks, as an example. There are many such companies uh, who are likely to become public in the next 1 year or 2 years or whatever. Now, what we do is we set up what is called as a sidecar. It's basically a carving out of a particular part of that portfolio. So let's say 10 people want to put in 75% of their investments into this particular sidecar. So we we ask you to sign this particular sidecar structure, and we can then submit a bid on SpaceX, for example, or Databricks as an example, whichever example you want to take. Right? We go and basically submit that bid. It can take up to 2 weeks for our broker to go out in the market and see, let's say we submitted a bid for $250 as a rough estimate, right? Let's say we submitted that, and we indicate saying that we are willing to accept plus or minus 5% or plus or minus 10%, whatever is that number, right? We take that. Uh, so so basically, our broker has to go out in the market and see who is willing to sell, SpaceX at that particular price within that particular range or whatever. And then they will confirm it to us within 2 weeks, saying that these shares are now available. So at that point, we will move the money from the hedge fund into this particular investment, and then those stocks are going to be held by the hedge fund in a sidecar vehicle. So, as an example, I would say, just imagine a motorcycle having a sidecar. So, the motorcycle is the hedge fund itself. It already delivers, 60% repose, 75% returns. Now, on the sidecar, we've basically, positioned a child, for instance, and that child is SpaceX. That sidecar does not move on its own because it doesn't have it basically just has one wheel right now, right? It doesn't have the other wheel because it's not yet listed. So it could be a year or up to 2 years until when that particular stock is listed. So it's got to sit in that sidecar until then, and once it is listed, we can then sell it, or we basically have three options at that point. So let's take the optimistic scenario. We buy low, and by the time it lists, the share price is on the higher side, we will make a pretty good profit. We estimate at least 60% profit. Otherwise, there's no point in taking money and putting it into the sidecar, because our main vehicle is anyway making 60%. So if it's not 60%, then there's no point in basically taking something like that. So if it does, then we would sell it, would get that money back into the hedge fund. You have liquidity on the hedge fund for you to uh, you know, go ahead and if you want to liquidate it, you can go ahead and liquidate it. The other option that we might have is if the stock price is going down at that point, and if our research tells us that we might need to wait maybe 3 months, 4 months, maybe up to a year, we might just hold off up to a year until until we are able to get that 60% or above sort of a return, and then we basically sell it. Or the other option that we could have at that point is, let's say the stock lists at an exorbitant price, and then the market reacts to it, and um, you see the price going down. So we could short sell it, right? So all these three options are there at that stage. So for anybody coming in as a limited partner and wants to sign up to the pre-IPO site letter, look at least a 1 to 2 year block when you basically don't have the liquidity, uh, but expect that this particular price will go up, and obviously you make a profit out of that, and at that point you'll be able to exit. So the structure is very simple. Um, this is how it works. So what are the sort of let's say caveats or risks that we must be aware of? So each bid is going to be $100,000 or more. So we as a professional investor, we will need to show a bid for $100,000 in order for us to buy any of this. And for that, if there are let's say a few of you who are interested, then we can combine that in this particular sidecar vehicle, and we can submit the bid as such. Now let's come to SpaceX in itself. The more recent news is that SpaceX has now acquired XAI, and they are also working out a deal with Tesla. So that announcement itself has a small note saying that SpaceX is likely to be floated in 2026. So indications are that maybe September, October, it would get floated. So we've been notified, I think, back in December onwards. We've been notified by our broker dealers in the US saying that there is stock available in SpaceX, Databricks, Stripe, and a few others. But particularly SpaceX, if you're interested in it, then you can put the sidecar together, and we can go ahead and invest in that. How does that work? And basically the caveats, etc. I basically told you about the 100,000 limit. Because it is employees or early investors who are trying to liquidate their holding, it's not going to be an instant purchase, right? So when we submit a bid, expect up to 2 months, expect up to 2 weeks for us to hear back, and by the time the funds are wired to them, and then we basically get the stock in hand, expect 2 to 3 weeks. By when we will know if the pre-IPO stock has been issued to us or not. The second thing to note is you may not be able to sell the stock until the stock floats at an exchange. So it could be a year, it could be more. In the case of SpaceX, let's say 2026. So if it doesn't go into 2026, if it probably spills over into 2027, you'll have to wait until the stock will list again. until the stock will list. Uh, the other option is, just like we bought the stock from some employees, we could make basically a secondary transaction through broker dealers in order for us to liquidate a holding. That option is available, though not the first option, but obviously that option is available as a mitigation in case the stock price um, you know is high, but uh, the IPO is not going to be anytime soon. Now, one of the things to note is, um, as a LP on the fund, you can only commit up to 75% on all side letters together, right? So if you are signing side letters left, right, and center, so I want to buy SpaceX, I want to buy, Databricks, I want to buy some Indian stock, I want to buy Stripe, etc., etc. All of these side letters together cannot exceed 75% of your investment in the hedge fund Helix Research itself, right? Um, so you might need to think through which pre-IPO stock you want to put in, or you might want to upgrade your investments, obviously by putting in an additional subscription in order for you uh, to action that particular site letter. Then the third factor to be aware of is, until the cycle completes, meaning we put a bid, we buy the stock, and then there is an IPO and we sell the stock and the money comes back into the hedge fund, you will not be able to redeem your investment until that particular point. So if it's going to be a year, it's going to be a year that you will not be able to redeem. So keep that in mind when you're basically getting it. Now there's two ways to get into the hedge fund. One is the LP mode, where you contact us and we send you the documents. And you basically sign up the limited partnership agreement, get it. Few of you might get into the fund using our retail partners, um, strategy link. So on the retail partners site, it gives you an instant liquidity, but it does not give you access to any of the side letters. Right, the side letters are only available to limited partners on the fund. If you're getting onto the retail platform and you invest through that, you are paying basically for the liquidity that it offers, right? You will be able to exit at any point, re-enter at any point, any number of times as such, right? Um, but it does not give you access to any of the sidecars that we are putting together. So we are coming up with other sidecars. So this pre-IPO sidecar is one of them. We are coming up with few others, particularly with respect to Series A and some renewable energy investments as well. We're coming up with other sidecars as well. So we'll tell you more about it when the time is right. If there are any questions, feel free to shoot that on the chat. Um, if not, what I'm going to do is basically to move on to the more broader, uh, I can say, macro update and the strategy update as such, right? Now, what is happening in the uh, macroeconomic and geopolitical scene currently, and why this is happening? Now, first of all, let me give an overall kind of a view. Um, Global GDP growth, as per the IMF reports, 2026 projected value is 3.1%. Uh, the the sort of consensus is that it's going to be steady. US GDP growth is expected to be 2.9, and our source for this is research reports from BNP Paribas. So we are not independently researching it. We are dependent on other research firms providing information, and we take that and we basically conduct further research on this. Um, Two things to basically look at: um, U.S. inflation from the consumer price perspective. The anticipation, as per Goldman Sachs, research report, 2.7%. So it's kind of above the target. So 2% is what is expected. So it's going to be 2.7. So I'm not too sure if the rate cuts are coming, right? So more recently, what has happened is there is a there's a Trumpster now becoming the Fed chairman. There is one more Fed governor whose term is ending, I think, this month or next month or whatever. I'm not too sure, but there could be another Trumpster joining in there. But let's say there is two votes. There are 12 people on that monetary policy committee. So looking at things, basically the Fed chairman is not like Trump, right? It's not a president's role. So he can't force everybody to vote in a certain way. He just has one vote. He doesn't have a casting vote as such. So are the rate cuts coming? That is one question that we have in mind. So if the rate cut comes in, inflation goes up even more. It does take, that can gets kicked down the road. By the time it lands up on your street, it's going to be a couple of years. So if there is a rate cut today, it takes 2 years by the time it basically lands up on your street. So uh, given that, I'm not putting in so much of emphasis on the new Fed governor, Fed chairman, coming in. I'm not putting in that much of emphasis on that. Other markets that we look at: UK stable, India stable, Europe kind of stable, right? So the way we are kind of positioning our portfolio is we want to play in the anchor game, right? So we want to play in uh, the areas where there are essentials, there are necessities. Even within the AI game, we play within the necessities. So the necessities are three things within AI: there is semiconductor, there is power, and there is telecom, and we invest in all three, right? We don't invest directly into that AI game, but we invest in the underlying nuts and bolts of that. So our strategy continues to be on that. And as I mentioned, we use this barbell kind of a model. So if you've done weightlifting, you know that there is a bar in between and there are two weights on either side. So one side is long. These are the anchors. These are the solid fundamental ones. The other side, again, solid fundamentals, but overpriced ones, right? So we take short positions on those. And in between, we stick together all these essentials, right? So in between, you will have like Dollar General, you'll have Pfizer, you'll have Procter and Gamble, Johnson and Johnson. We take those and we take small positions in all of these, and we stick that together so that the bar is stable. On one side is anchors, and the other side is basically the short positions. Again, even for the short positions, we will never take any of the fundamentally unsound businesses, loss making businesses. We will never take any of those, hype sort of stocks. We only take fundamentally sound ones, but these are overpriced. And because the valuations are exceedingly high and we expect a price correction, we take a short position on that. Right? That is how this portfolio works, and this is uh, how the model is kind of positioned. Now, looking at where the market is going, Now let's look at that 10% credit card interest rate gap. Now we've had positions in Mastercard, for example. Mastercard stock took a beating. We are not cutting that out because we are anyway profitable even after the beating. So we're not cutting that out. We are staying put. Mastercard is fundamentally sound business, so we want to stay put onto that. Uh, so when you make such kind of a policy, and that to give a very short time frame for lenders uh, to implement it, it causes a shock in the market. And this administration's tenure is all about shocks. So we are expecting more shocks, but watching out for these shocks and how it transmits through the systems. Now, when something like that happens, it's not just the credit card issuers alone that are going to be impacted. These companies like Mastercard, Visa, PayPal, etc. All of these also get impacted through this. So you might think PayPal doesn't do any lending. So why is it? So people don't. When you basically look at it from a trader's mindset, they don't look at it that way. They are dealing with individual customers; they must be hit, right? And today we've got a lot of armchair warriors who are onto X. It used to be called Twitter, whatever. They are onto X, and they give you sentimental signals, right? Whether that is right or wrong, the way we look at it is we watch out for these sentiments. So this sentiment signal on SpaceX is what triggered this particular call about pre-IPO stocks. Is there an opportunity here? The opportunity is there because so many blogs on the internet talking about it. They want to buy. They want to buy. They want to they're positioning themselves for um, for a potential IPO and they want to apply for it. Now, we are a hedge fund. We are not waiting until the IPO. We give you the opportunity right now as a private investor. Um, you know, uh, we can bring that opportunity right now, right? So that's what we see, with respect to that. And then more recently, we analyzed Alphabet, Google, for all you know, and then we said, we want to watch out for their earnings. The earnings came out really well. So profit exceeded expectations, but there are a few red flags that still remain, right? So we told you about, you know, uh, what is happening, um, with respect to the various governance issues. Number one is uh, the uh, basically the impression that Google almost had a stranglehold on the advertising industry, advertising technology, and advertising industry itself. Uh, right. So uh, that is something, the Google Ad Manager suite, right? That is something that is of regulatory scrutiny. So it could be divested as what they are expecting. Um, the search business in itself has been seen as a monopoly. EU antitrust right now in the US as well, they're being seen as a monopoly. This has to be seen in light of what was happening in 2025. Search volumes have come down because what we do right now, instead of going into Google and hey Google, asking Google to do something about it, instead of that,
That's what I'm here for.
that's my Google Assistant telling me.
The
That's what
mic's off.
right. So instead of that, what we are doing currently is we ask ChatGPT. So we go into that and we start chatting, with ChatGPT, and we start asking those questions there. So automatically, this change of behavior, it's not just 10 people doing it; it's millions of people doing that. So search volumes have come down. So that's another red flag that we've seen. Um, the other side that we've always maintained is Google has multiple share classes, and founders will be able to, vote on, basically have a casting vote on anything that they want to do. So from a governance perspective, yeah, while they are making the right decisions, yeah, we're happy with it. If they're not, we're not we're not that happy with it. We saw that in Tesla. The board did not uh, take the right action when Elon Musk had his political ambitions and whatever, right? And he pretty much destroyed, um, the company's, positioning by associating himself politically, right? So what the board should have done was to distance itself at that point. That didn't happen. So we do observe these sort of governance issues frequently. So that's on Google. Now, one of the other ones that we've been holding for a very long time is Caterpillar. Um, Very good fourth quarter revenues, above expectations, and highest single quarter performance in the company's history. So we are continuing to hold, and in fact, we might actually increase our weightage on Caterpillar. Um, and most importantly, um, you know, when you basically look at Caterpillar, people tend to mistake that as construction equipment and whatever, right? But there is a part where there is extensive growth, and that is the power and energy segment within Caterpillar. Um, a lot of that is AI related, data center related investment, right? That's where the um, growth is coming. Then, how are we positioned currently? So overall portfolio, as we as I've always talked about, we use 8 factors here, and those 8 factors are divided into 20 different pillars. Right? That's what goes into our model. Those 8 factors are the 6 standard factors in the market, plus we add 2 additional factors: the eco-efficiency factor and the integrity and health factor. So we reviewed our entire portfolio on the 8 factors, and what we are basically going to do right now, essentially in terms of what we are doing, Mastercard, we are increasing our our weightage. Caterpillar, we want to increase our weightage. Um, Johnson and Johnson, we want to stay put. Carlyle Industries, we want to stay put with respect to that. Lincoln National Corporation, we want to stay put with that. Tesla, we are increasing our short. Meta, we are increasing our short, and Nvidia, we are increasing our short. So all three of them, on the short book, we are increasing the short by about 1%. So that's on this. More recently, we analyzed Google, and we are adding Google to the long book, not the short book. It's going onto the long book. We held Google as a positional trade last year. Now we're going onto the long book. Essentially, we're bringing it onto the long book. As I mentioned, we use a 60% sort of minimum return. The way we achieve that is it's called constant proportion portfolio insurance. So basically, the barbell tries and moves up and down based on how the uh, market performs. And for that, what we tend to do is we use a certain cushion, and then we basically ratchet up or down based on how the market is performing, based on which factors are helping our portfolio. So in 2025, if you essentially look at it, uh, most of our returns, both on the long book, on the short book, as well as the anchors, right? You know the uh, the barbell rod in between, right? So on that, most of the returns came from momentum, right? Uh, but going forward, what we expect to see is that the impact of momentum is probably going to be about 30%. So last year was 70%. So this year, um, last our accounting period is until March, but last calendar year it was a momentum trade. So 70% of the returns came from the momentum. So 70% of whatever returns we made came from momentum. But uh, going forward into January, February this year, what we observe is it's not going to be that much of a momentum trade. We have to look at value, market cap, the beta, the integrity and health factor. Uh, what is integrity and health factor? As we all know, more than 93% of all companies that have true and fair accounts, 93% of them, uh, their their statements are unfair to investors, right? So we look at that, we look at where they are trying to inflate the market, etc., etc. Then we put a score on their integrity and the financial health of that particular company. The other side that we also look at is the eco-efficiency factor. What is that? Is there an unjustified premium? The fact is, if you have a ESG report on your website, if you have an ESG rating, or if you have a sustainability page on your website, stock price goes up 2 to 3%. This is despite whatever Trump wants to believe. Right? Trump might say ESG is dead, whatever, but that's how the market prices it. And as I've always maintained, the growth of the US economy has always been because of private innovation. It's never been due to government policy. So don't put a lot of emphasis to whatever Trump says and what he posts onto this. It's largely noise as such. So you could have Mickey Mouse as president and still we'll be doing really well. So that's the reality of the US market because you know private innovation, the way that companies innovate, bring in innovative products and services, the fact that they work with various universities, they invest in R&D, that is what drives this economy. So don't believe the hype and the narrative that certain policy and whatever. Yeah, it does help. There are there have been periods within the last 100 years. There have been periods, maybe about if I look at it, maybe about a total of 10 years in between. Yeah, not completely 10 years, but there have been periods in between about 10 years in the last 100 years when favorable policy lifted the markets, but most of the time it is private innovation that basically drives the market. So I don't believe the sort of policy sort of picture. So as I mentioned, we use this cushion and we use basically sort of a ratcheting mechanism so that the overall returns start going up as a whole, right? That's how we basically play with this. And going back to how we are kind of positioned and why this particular pre-IPO sidecar is there is an opportunity right now on SpaceX because of the more recent news about SpaceX acquiring XAI. Obviously, there is more interest in the market and potential listing later this year. So, if you'd like to make use of that opportunity, we have that opportunity right in front of you. If there are any questions, happy to answer that. largely that's where we stand as of now. Those are the changes that we're going to make, with respect to our portfolio. Some of those changes have already gone in, but a few of the other changes are going to come in during the week. Right. Happy to answer any questions. Feel free to chat. Just type your messages in the chat on the right side. At the bottom, you will see basically um, a chat window where you can go and type it. I'll wait for a few minutes, or otherwise we can close the live stream. So we also received an update on the Indian budget, largely favorable. I'm reading through the analysis that we got from our partners in India. Um, Obviously, the partner firm is an asset management firm in India, so they do their own research, and we basically get access to it, as a partner. And I think I'm going to be looking into this in a bit more detail, but overall very favorable. There are a number of areas of investment opportunity there. Again, pre-IPO in India as well available. So if there are companies that are of interest, let me know and we will be able to source that as well. If there are no questions, I think I'll go ahead and close the live stream. Thanks for joining in. Right, feel free to either message me on the Substack, or if you're connected on the WhatsApp group, yeah, we can you can chat there as well. Thank you.